Welcome. How would you like to earn high yield distributions and annualized gains between 77 and 114%? You may not believe me now, but stick around and I will show you 5 ETF products that produce that much in just this past month. If that sounds good, then strap in, hit that like, and let's get started. So today we're going to talk about option income ETFs. And these are exchange traded fund products that generate income through sophisticated options trading strategies selling covered calls on one or more underlying stocks. Now, if that sounds Greek to you, then the good news is you're normal. And the even better news is it's okay. Because the beauty of these products is that for the low cost of the fund management fee, you essentially pay a professional to do the trading for you and you receive a share of the income they generate. These products first started appearing in the mid-2000s, but in recent years, there's been a new trend focusing on high income strategies using highly volatile individual stocks. The options trading strategies thrive off of volatility and harvest the most income when the underlying stock is more volatile. In 2022, YieldMax, now one of the largest fund families offering these products, launched their first option income ETF, TSMY, based on the underlying stock Tesla. The next year, Roundhill launched their own batch of these products, and since then, they've exploded in popularity. Now, before we go too far, I want to highlight dividendchannel.com and their super handy drip returns calculator. You can just plug in your favorite dividend ETF, select a time period, and it will show you total returns with or without dividends reinvested. And this is the tool that I use to calculate the returns that I'll be showing you in this video. Now, in case you've been under a rock, perhaps the most popular option income ETF for high growth adjusted Bitcoin bulls is the YieldMax Fund MSTY, which trades synthetic covered call options on the underlying stock of Strategy, formerly MicroStrategy, ticker symbol MSTR. Many investors bullish on Bitcoin are also bullish on Strategy, the #1 Bitcoin treasury company. We have the confidence that MSTY Fund will be able to generate options income from MSTR stock and pay high yield distributions for years to come. MSTY launched in February 2024, and after its first 12 months, its total returns with dividends reinvested was a whopping 218%. Just within its first 7 months, by the end of September, original investors have made back over 100% of their cost basis and were playing with house money as they continue to receive distributions month after month. That said, in the most recent 7 months, or year-to-date 2025, we've seen reduced volatility in the underlying MSTR stock. Now remember, options trading thrives off volatility, so the low volatility meant reduced options income and decreased annualized gains of only 46%. Now I say only 46%, somewhat tongue-in-cheek, because compare that to other investment vehicles like US Treasuries paying 4%, or even some of the new strategy products like Strike, Strife, and Stride, which pay out a comparatively higher 10%. Of course, as volatility picks up for the underlying MSTR, we do expect the option income and the distribution payouts to increase. Already, based on last month's distribution amount, MSTY is paying a distribution rate of 82%. So option income ETFs could be a good way to generate monthly or weekly cash flow without having to sell your Bitcoin or stocks. Now, MSTY is not the only option income ETF, and YieldMax is not the only fund family. There are literally tons of other high yield income ETF options to choose from based on other individual stocks or a basket of stocks, or that use modified trading strategies like adding leverage. I do recommend you start your research with the YieldMax and Roundhill fund families. And whatever fund you choose, you should be bullish on the underlying stock it uses to generate its option income. Personally, I'm tracking several funds that are tied to Bitcoin, crypto, AI, and technology, since that's what I'm bullish on. Remember, I started this video by promising to show you 5 funds that are paying annualized distributions between 77 to 114%. These 5 funds, highlighted in yellow, each paid distribution rates in that range this past month. But looking at recent distributions is not enough to select an ETF. You probably want a fund with a proven track record and a history of reliable distribution payments over time. Here's a table ranking some of my favorite performers right now. Now you'll notice that it doesn't just look at recent distribution, but it also goes back to the 3 months performance annualized and the 6 month performance annualized, because we want to make sure that there's a consistent, reliable history of payments. Now, to produce the ranking, we start by pulling 3 pieces of data. First, the recent distribution rate based on the most recent distribution payout. Next, the 3 months annualized performance with dividends reinvested. And then the 6 month annualized performance with dividends reinvested. Next, we assign a ranking for each of the funds based on their performance within each of those timelines. And then lastly, we create an average of each of their 3 rankings. By averaging the rankings, we create one aggregate score that gives equal consideration across all time periods. Now, some of the ETFs pay weekly and some of them pay monthly. Now, the top overall performer is NVDY, which had an average rank of 2. Even though by most recent distribution, it ranked 3rd, but it did finish in 1st place for 3 months annualized performance and in 2nd place for the 6 month annualized performance. And notice that its 3 months annualized is a whopping 190% gain. Other honorable mentions are PLTY, based on the underlying stock of Palantir, which saw a 123% gain over the past 6 months with dividends reinvested. And another I'll call out is CONY, CONY, based on the underlying stock of Coinbase, which finished in 2nd place based on its strong recent distribution of 114% and its 3 months annualized of 169%, even though it ranked 2nd to worst for its 6 month annualized performance. So it's something you want to look at. In this case, it came in 2nd place. It's recently been doing very, very well, but when you go back 6 months, it was not so well. So again, that points to the volatility of the underlying Coinbase and the options income increasing or decreasing with that volatility. To wrap up, these are revolutionary products, but I want you to know they're not without risk. And I'll highlight just a few right now. The first is single stock risk. Many are based on a single underlying stock, which means you're exposed to the full downside risk of one company. If that company stumbles, it's likely the ETF will too. And that's why you want to make sure you're bullish on whichever underlying stock is used for the ETF you choose. The second is capped upside. Options trading strategies inherently limit potential gains. Sure, you receive immediate income, but in exchange, you give up the potential massive upside if the underlying stock really takes off. And lastly, there's variable income. Option trading is heavily dependent on the volatility of the underlying stock. During periods of low volatility, when the price is chopping sideways or a little bit down, distribution payments can be lower. So do your own research to find the best funds for your portfolio. If you have some favorite ETFs that don't appear on my table, go ahead and add them to the comments below. And lastly, be careful not to get so distracted by short-term income that you forget to build generational wealth through the Apex Savings Technology, Bitcoin. Most people find it easiest to build that wealth through a disciplined DCA or dollar cost averaging plan. Thanks for watching. Be sure to like the video and share it out to those you love. And until next time, be wise, be safe, and stack sats.